The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Hey, Rick. It's
Andrew?
been a very busy 2 last weeks, huh?
Yeah, absolutely.
Starting off with our flagship event in Brussels. How was it for you?
I think it was fun. As an organizer, but usually organizing an event for me is not that fun. It's more the means to an end. Making sure that we have those conversations that give me energy to think about the future of our industry, of banking, and try to influence that for the better. That's been the going in position ever since we started almost 10 years ago. But this time there were not too many hurdles. Everything went very well. Feedback was overwhelmingly positive. We had again more than 400 people joining us. It was a bit hot, but aside from that, I was very, very pleased with all the entire setup. And of course, there's always things that can be done better, and we'll definitely consider that next year. But I think overall, it was a very positive experience. Wouldn't you agree?
No melted chocolates?
I don't think so. I got a lot of compliments from people who shared it with their bestie at home. So that means that at least some of the chocolate must have traveled well.
They got home there, but yeah, it was really hot. But I think it went really well. It felt like a really engaged the whole time. There was a buzz. There was a buzz there this year that I don't think I've felt there for quite a while. I haven't
Oh, really?
obviously been there from the very beginning. No, I just thought there was a continuous buzz, and I think the way that we had worked out the layout and everything was really good this year.
Challenge on
Very-
us to do it again next year in a new setting.
I was going to say, I have to be honest, I am already looking forward to next year. I love the event space that we have chosen for next year for our special 10-year anniversary event. And blatant plug to anybody, just to mark the date of May the 25th for next year for our 10-year special anniversary edition.
I've already been informing myself to see what kind of music, what kind of DJ or anything we should also set up for.
Yes.
The terrace outside if it's good weather, or maybe inside just to get more engagement in networking as well.
I think that terrace area, even if it isn't great weather, that terrace area is fantastic, and we've got to leverage that. And I hope that we can get some people curious about maybe sponsoring some things on there, like a bar maybe, or a coffee bar, or that terrace. That terrace is a great area, and I think that.
But our podcast is not a sales channel.
Yes, this
People
is
are not
true.
here to listen how much
This
they
is true.
spend on sponsoring the terrace. So a week later, we had 2 dinners.
Mm-hmm.
Quantum safe authentication, always a tough topic. We always end up with very curious minds, sometimes more questions than before. But I think that's a pretty good thing. That means that we made people think. And then the other one was pretty awesome as well. Agentic AI with an enormous diversity in the audience, which I really loved as well. Great overview over Amsterdam from 23rd floor. No, really pleased about last week. It was a short Money 2020 for me, but also a pretty good one.
What was your overall impression of Money 2020? I have my own opinion, but I'd like to hear yours first. Just before we get
As
into
usual,
your
a great place to meet people. I think it was smaller, much smaller. In terms of content, I haven't attended much. I had the impression, but maybe that's because I'm too long in it. I had the impression that it was too much about buzzwords, too much about trying to find the most fancy titles for sessions. It felt like the whole program was built on AI, and that didn't engage me at last. So I only attended 1 or 2 sessions properly, and the rest like a little bit. And then I moved back away, went for another walk across the exhibitions, etc. So Money 2020, always a bit mixed. Happy to be there. But for the first time, I didn't have the fear of missing out, having to leave the second day already for some reason.
You missed DJ Yoda. Oh, man. What a great! I only stayed for about an hour and a half of his set, but that was it was a great mixed. He mixed video, blended video with the music, and the video was amusing. It was old, 80s and 90s songs, that kind of thing. But getting back to the Money 2020. Being a bit smaller wasn't a huge disappointment for
You
me.
were the conference.
I was at the conference, yes.
Yeah, but you being smaller or the conference?
I wish I could be smaller. Yeah, especially around the middle at the moment. But the conference venue was definitely quite significantly smaller in terms of the stands, which didn't make it a bad thing.
No, but yet they
Last year,
kept saying it was 7,200 people, which is not small.
yeah, not sure I would have put that number on there, but it made it a lot easier to get around. And Money 2020 always, to me, feels like a big reunion party of people that have been going there since the beginning. You bump into, you meet so many people. So from that aspect, it's great. I did attend a lot of sessions. I attended about 8 different panel sessions. I had a singular focus. I was looking for new, fresh insights on agentic AI. Agentic AI being the big buzzword at the moment. It's also the white paper I'm right in the middle of researching, and I'm moderating a session at the EPC General Assembly coming up in a couple of weeks' time, all about agentic commerce. So I wanted to see what people other than my panel members at the EPC have to say about it in our prep calls. And there was my biggest disappointment. On every single stage, it felt like the panel members were only saying things that already appeared on their website or in the public.
Corporate
It
tax.
didn't feel like conversations. It didn't feel like the panel members really engaged with each other or with, the topic at hand. It was too sanitized for me, which means that the session that you attended and wrote this week's article on sounded like that stood out as a highlight.
It was, but maybe also because I influenced it a little bit. First of all, it was a great space. I think, let me have a look. I think it had space for like 50 people. The Money Lab, it was called. And it required a long queue to get in, unless you found the exit to get in, like me. And it was a great session because it was so limited. I think it was supposed to be uncensored. It didn't always feel that uncensored, although I think Samantha Emery did a good job, but of course she's also a bit held back by the participants in the panel. But at the end, there was room for questions. So I raised the elephant in the room. And that was praised by a lot of people in that room as well. The session was called, let me see if I don't make any mistake, Understanding the Geopolitical Impact of Stablecoins. That's an interesting one because most of the time stablecoins is about customer experience, use cases. It's about
Technology.
Why you use blockchain, etc. But what's often not being told, and luckily at our conference in Brussels that wasn't the case, but what's the impact of having a stablecoin business that's so dominated by America, by United States? And that was kind of what this was also about. You have a couple of areas, a couple of fronts. There's China, there's the United States, a little bit Europe. But if you look at the total stablecoin market today, Europe's not that big at all. It's even pretty small. In the sense that, and let me have another look at what I wrote down. Simon Sider, one of the panelists, shared today's European stablecoin market is 99% US-denominated coins issued by US entities. The use cases for stablecoins, mainly to head for crypto exchange and have that 24/7 and instantly, but increasingly more, for example, Qivalis is more looking at a corporate space, there's the remittance space, but it all has to do with that atomic settlement of payments. Essentially, having so much US denominated and looking at the Genius Act that defines what rules issuers are subjected to when it comes to stablecoins, means that every stablecoin you or I would be buying to help with that atomic settlement also means that we are essentially also supporting the American economy because the issuer of a stablecoin needs to have an equivalent of US debt. And that is, I think, a very interesting angle worth discussing, because suddenly European sovereignty is no longer about making sure that we are independent from American technology providers, but it's something much bigger. If stablecoins keep growing as a business, as an alternative for traditional rails, and it keeps being very dominant by US issuers, especially if, like today, it's dependent on mainly two issuers, you get an additional problem, because if one of those fail to comply one day or another and trust is gone, evaporates, then how do you deal with that kind of a bank run? But aside from that, suppose that isn't the case, it still gives a lot of power to the US market. And that's, I think, a very interesting angle, and the main reason why even the European Central Bank and why the National Bank of Belgium, for example, came and talked about stable coins at our conference in Brussels.
Yeah, Tim
Because
Hardeman.
Europe needs to act one way or another to avoid being too dependent from American debt to if the stablecoin business keeps growing in Europe.
I was gobsmacked by the statistic that you had quoted in your article from Tim Hermans. Unfortunately, I didn't get a chance to attend this session, but where he stated that last year alone transaction volumes exceeded $60 trillion in stablecoins.
I think that's globally, of course.
Yes, yeah. It's still, in my head, stablecoins was still sort of a niche thing. It's what those crypto bros are using, that kind of a thing. And I've been unashamedly quite dismissive about the crypto bros over the years, so I'll keep my opinions to myself there. But that's a big number, even globally, to know that the transaction volumes exceeded 60 trillion. So no matter what percentage of that is European, as you say, wherever those transactions took place, they're all funding US debt. Now, the topic of your article was the conversation money 2020 needed. Is that because you think that the European industry, the banking industry, currently underestimates the political side of stablecoins, or they know about it and they're just not talking about it? Why do you think that it's
I think
not?
the reason that so many banks are currently backing, for example, the Qivalis initiative, European stablecoin initiative, is because banks see the concern. Initially, I thought that was mainly driven by the fear of CBDC, which might disintermediate banking a little bit as well. But after attending that session and hearing what's going on now, I think there's more at play. Why I thought it's so interesting is mostly because I think the regulators have been cut by speed. Stablecoins have been evolving rapidly, and currently I think we don't have a sufficient answer from Europe to deal with that, or to make sure that we get less dependent of these US-denominated stablecoins. I think it's more from a policy perspective than from a banking perspective that should be high on the agenda. This is about geopolitical power more than private power, which most banks, they're privately owned, so they have a different kind of an agenda.
You also pointed out that banks may need to help build Europe's stablecoin response, and we can see from Qivalis that is already happening.
I think that's also a matter of being less dependent themselves on US debt, etc.
Yeah. But I mean, even though stablecoins could challenge deposits and payment rails, and we've had this discussion within the context of CBDCs as well, do you have an opinion on how you think banks should look at that tension between helping to build the rails that may ultimately affect their structure of their deposits and again, we've had these discussions around wholesale CBDCs as well, but how do you think they should approach this? I'm glad I'm not in banking and haven't got that kind of a...
As same with many, I think who's more stake here, or what's more at stake here is, for example, Swift business.
Mm.
Alternatives that try to put themselves in the market, like Visa, EBA clearing, those kind of players who build the traditional rails that connect banks. They're probably more at risk than the banks themselves. Banks need to play along, I think, because stablecoins can also help create more efficiency in the trade routes between banks. I mean, stablecoin issuers don't need to be banks, so there's definitely some potential competition as well. And they need to be careful with it. Choose their battles. For some, it will be an opportunity. For others, it will be a risk. And all of that depends on the strategic decisions that they want to take going forward. But I think there's definitely opportunity for banks, but they need to be aware that part of their current business may be disrupted with stablecoins. But is that a problem? I'm not so sure.
Yeah, I think the geopolitical issue is more of an issue than the infrastructure, the technology side. I just, sovereignty has been brought up so many times on our roundtables recently as being, it's a worry, it's a concern, and not just for Europe. There's a number of geographic regions in the world that are
but never in this context.
They're looking at sovereignty, and I think that this is linked to that within stablecoins. So, closing question from me to bring the podcast on time for a change. After writing the article and considering the sessions that you've sat in both in Brussels and in Money 2020, do you think that we should be including stablecoins on our agenda at barbecue night in September the 10th? Sorry, I can't get away from doing blatant plugs.
Question too long. I have less than 1 minute left. We might. I'm reaching out to a couple of people to see who wants to get involved in the agenda. Right now, we have the Director General of the EPC already confirmed. We're talking to a few big tech players. I'm talking to some stablecoin issuers, banks as well. We'll see who pops up. Can't make any promises there.
And again, last plug is that our Payments Barbecue Night is all going to be around regulation versus innovation, what's truly shaping the future of payments, which is why I brought that up, is because I think stable coins, you've put a new spin in it for me. I've moved it out of the crypto bro bracket, and now it's in the funding American debt. I'm not sure I'm happy about that, but I'm not a banker.
Right on time. 20 minutes.
As a final bonus for our listeners that weren't at the Banking Scene Conference Brussels, we're going to end this podcast with our fantastic, we think it's fantastic.
I think, Andrew, the ones who were there will be even happier hearing it again.
The banking poetry ode to the banking industry, written by Rick with a bit of help from his AI friends, and then turned into music and video with a little bit of help from my AI friends. So enjoy.
The banker woke before the dawn, his trusted mainframe humming on. He checked his mails, reviewed the news. Another fintech changed the rules. A startup somewhere raised a round, while AI agents buzzed around. The board now asked with subtle dread, can ChatGPT replace Fred? The payments team discussed the rail, while fraudsters launched another scam by mail. Compliance side, we need more staff. The CFO just tried to laugh. The customers no longer wait. They want their banking feeling great. Not digital first, not mobile new, but frictionless and human too. And somewhere deep in Brussels town, where old brick warehouses look down, a gathering starts to take its place for bankers trying to win the race. Not just for growth, not just for fame, but searching what relevance might mean again. Welcome to the banking scene, where banking's future can be seen, where CEOs and thinkers meet while running late on little sleep, where one debate says branches matter while others claim their old world chatter, where bunk talks boldly of what's next, and legacy banks look mildly vexed, where payments people fight for Europe's rails, through instant flows and token trails, where Wero, CBDCs, stablecoins too, all promise something bold and new, where AI whispers soft and sly, dear banker, let me also try to manage risk, to guide the trade, to optimize the loans you made. And somewhere in another hall, the fraud teams warn us one and all. The scams are smarter every day, with deep fake voices leading astray. A behavioral scientist takes the stage to calmly tell the AI age that humans still are strange at heart, and trust itself remains an art. A philosopher speaks about ethics and soul, while someone from Treasury clutches control. The regulators quietly nod, like ancient priests interpreting God. And all throughout the crowded floor, between the panels by the door, the real magic starts to bloom. Wait, you struggle with that too? Because every bank, both large and small, is facing now the self-same call. If banking's everywhere, all the time, then how do you remain sublime? If AI writes the client mail, and payments move like silent hail, if products fade and apps all blend, what truly keeps the customer friend? That is the question, that is the fight, that keeps this industry awake at night. So come to Brussels, join the scene, debate what relevance might truly mean. Bring all your doubts, your hopes, your fear, your transformation roadmap for next year. There will be coffee, there will be stress, there will be panels with too much yes. Someone will mention ecosystems twice. Someone from strategy will say embedded nice. But there will also be something rare, an industry breathing open air, thinking aloud, challenging fate, before the future arrives too late. The banking scene, May 28, where banking comes to contemplate.